be talking about the crypto product roadmap. We have a bunch of great panelists who work in all different facets of the industry. So I wanted to start off by letting them do a quick intro of themselves and what they do. So your title, company, sort of a brief description of what it does.
Hi, loud, sorry. Hi, my name is Arianna Simpson. I run Autonomous Partners, which is an investment fund that I founded. I've been in the crypto space for about 5 years, first operating at a company called BitGo, where I headed up product, and now investing full-time.
Hello, my name is Rachel Mayer. I'm the product lead for Circle Invest, a mobile frictionless way for consumers to invest in digital currencies. I was a trader before and founded a company called Trigger Finance, which was acquired by Circle in the fall of 2017.
Hi, I'm Brian Kelly. I run BKCM. We are a full cryptocurrency investment firm now. We have a cryptocurrency hedge fund, venture capital, and a couple other funds coming very soon. And a couple times a week, you'll find me on CNBC doing Fast Money.
Hi, I'm Rob Segal. I'm one of the founders and CEO of Crypto Global, a Canadian mining company, diversified, mine Bitcoin, Ether, Litecoin, Dash, set up in multiple locations. We started last year. We were acquired 2 weeks ago by a group called Hyper, and we'll be sharing more with that in the future.
Great. Thank you all for being here. So I wanted to start off by talking about what we've seen with the price volatility in Bitcoin and across the crypto market. Obviously, we were at almost 20,000 in December, and then we've had ups and downs, now back up to something around 9,000, 9,500. I wanted to ask you guys about, how you're seeing, how much does the price volatility matter in what you do? I mean, is it affecting client demand, investor demand? And maybe we start off with Rob, actually, because with mining, I know people have been talking about, well, is it even profitable to mine Bitcoin or other cryptocurrencies when the prices are low? So what do you have to say about that?
Well, certainly the price is a massive factor in institutional and retail investors having interest in the space. As the prices contract and mining difficulty continues to increase, the margins get very, very thin. We look at the mining business very much as the center of the onion, and the closer you are to the middle, which means lower cost power and lower cost operations and a higher price currency, the more likely you are to succeed or to survive. I think what you've seen with the downturn in pricing and with the increase in difficulty is a lot of the speculators and a lot of the smaller miners will get kind of moved out, and it makes opportunities for consolidation in the space, but it's a big factor. Pricing is one of the 3 major factors that certainly controls mining.
But you still mine throughout the day.
Oh yeah. If you have good price on power and you have efficient operations, these are the times to hoard a whole bunch of Bitcoin, Litecoin, Ether, Dash. This can be a good time. You just have to make sure that you don't spend more than you're making.
Brian, do you want to go down the line?
Well, so I'm somewhat of a volatility junkie, so the volatility for me is fantastic for my business. It certainly, when you see the asset go, Bitcoin in particular, from 20,000 down to 5,900, it shakes a lot of people out. And we would get a lot of calls in December, how do I get into your fund mid-month? Which is kind of unusual. We don't get so many of those calls down at these levels. Although I would say what we've noticed over the last month or so is there's definitely more sophisticated investors getting into the space. Institutional investors, the likes of family offices, fund of funds, and they're starting to redeploy capital at these levels. So you're starting to see some of the smarter money in the space come back and take advantage of the volatility that we've seen over the last 3 months.
At Circle, we're taking the long run view. It's quite the opposite. So we actually don't focus hardly at all, specifically at Circle Invest, on short-term volatility. We're taking a 10 and 20-year view for consumers to really get invested early on into these crypto assets. We want them to exactly have the opposite behavior of focusing on FOMO or FUD in the short run. Having said that, still, short mini bull runs and bear runs do affect us operationally. We might have more operational costs when there's more demand. And the converse is, true as well. When there's more quiet times and less interest in crypto, that's when we as product builders take the opportunity to reflect and really build services and products that are going to be there for those 10 and 20 years down the line for consumers?
Yeah, I have the same kind of long-term view, but from the investor perspective rather than the company side. So, I tend to be more of a VC-style investor even when I'm investing in liquid coins and tokens, because I think ultimately this is still a very nascent technology, and so you can't really expect runs like we had in 2017 to be consistent. I think it's important to zoom out and say, oh, wait, this is still up like 9x in a year. I think if most public equities did that, everyone would be very excited rather than concerned. So ultimately, I think keeping kind of the time horizon and the ability to zoom out in perspective is important.
Yeah, and from at least from what I can tell, it hasn't really stopped sort of the pace of product launches. I'm still getting just as many pitches with blockchain, whatever. Somebody emailed me yesterday saying they got married on the blockchain. I don't really know what that means. But I guess, with all the products and 1,600 tokens or whatever there are out there now, what do you think, are there some where blockchain, this is a good use of blockchain, or where it's really just not working? This is something that, you kind of threw the name blockchain in there as a buzzword, but it doesn't really belong with this technology, or it's not a good use of a token. Maybe, Arianna, if you have an example of both sides of that.
Well, I think at a high level, one of the things I've really been excited about is the fact that, price activity notwithstanding, what happens when you get kind of a major bull run like we had in 2017 is that it attracts a lot of talent into the space. And so I'm seeing a lot of people coming into the industry from, the tech side, from other industries. And, I think when I first got into the industry about 5 years ago, it was more of here's a blockchain, let's try to figure out what to do with it. So it's kind of a blockchain in search of a problem situation. What I'm seeing now is actually people who are domain experts in their particular realm saying, oh, look, my industry has this problem. I can actually use the tech to solve that. And I think, I'm seeing that in all kinds of businesses, anything from tracking the provenance of physical items like diamonds to make sure that they're not coming from conflict zones, all the way through to, how do we settle on the blockchain. So, it really spans the gamut, but I think in general, the quality of teams that I'm seeing has definitely improved in the last, 6 to 9 months.
I think what's also working well, and I think we have sort of a distorted perception here in the US, at least for financial services as it relates to blockchain, is really the anti-censorship qualities that Bitcoin specifically has. I'm originally from Venezuela, and I grew up there and left when I was 18, and there is an actual dictatorship with censorship, inflation, it completely ruined the economy. And so there are pockets of communities there still in Caracas that are mining and using Bitcoin as a true store of value to skirt dictatorships and corrupt governments. And that's something that's not necessarily talked about so often in the blockchain space. So really exhibiting the initial qualities of decentralization, anti-censorship for Bitcoin, specifically in Venezuela, is one that I personally feel very passionate about, and one that is working well to skirt the inflationary pressures on the bolivar, and having that store of value in Bitcoin help everyday Venezuelans.
Well, I mean, when it comes to tokens and the projects are out there, kind of the first question that we ask is, if we didn't have a token, would your project or would your solution still work? So basically, do you need a token or not? Most of the times the answer is, no, we don't really need a token, but it's a way to raise money, that type of thing. So that's, set those aside. There are use cases for it. We're slowly finding out what really the best ones are. So far, the killer app for the cryptocurrencies have been currencies, exactly what they're designed for. And I would suspect that really are the ones that capture the value over the next 3 to 5 years. In terms of the 1,600 or so plus adding every day, I think you should expect that 90% of those things go to zero. And that's not dissing on cryptocurrencies. It's just that all venture capital deals have a 1 out of 10 type of payoff ratio. So to expect something that has raised $100 million with no product and no experience in running a $100 million business for all 1,600 of them to be successful, I think would be foolish. I think you look at it the other way and say most of them are going to fail.
The ones that are most interesting that we're seeing are management of assets in terms of healthcare. So managing yourself as a brand and all your healthcare information. I think you're going to see some great stuff coming out of that industry. Travel, insurance, those would be the areas where we're seeing real great opportunities. But again, we're a utility company, so our goal here is to provide the power for all these people. And I think the other opportunity that you'll start to see is outside of the utility side of it would be things like custodial and the management of those digital assets, and the people that can really provide comfort and great service and product in custodial and on the management will be very successful. But I agree with Brian, you're going to see a whole bunch of a lot of stuff shake out in the next little while. Ask yourself if it's a good business first.
And just to add on to that, what's interesting is it might be 5 years before we know these things failed, because they raised $50 million and they have a 5-year runway. So they can go to the beach for 5 years and then maybe we'll know their fail. So it'll be interesting to see. Just do your due diligence on these things.
Yeah, Brian, you also said something interesting that I'm wondering if everybody on this panel agrees with, which is that so far the killer app for cryptocurrencies has been currency. Does anyone here not agree with that? That the killer app for cryptocurrencies so far, they're not working well as currencies?
Well, I actually think there's another killer app, which is CryptoKitties. I'm going to be a basic biatch there, but it's the one that has seen true considerable traction, at least on the consumer side, other than the speculative nature of store value of currencies themselves. It's in the space of digital collectibles. It obviously includes blockchain, internet, cats, and consumers, so there's a lot of potential there. And even in China, I think this week, Tencent released a very similar sort of game that combines Pokemon Go and CryptoKitties. So this space of digital collectibles, we're seeing it not necessarily in the blockchain, with Rally Road, collectible jewels, collectible sneakers. I think that's probably the killer app in the killer space going forward, especially for consumers.
Yeah, I would agree with what Rachel said. I would also add that it's almost become, at least in certain circles, a bit contrarian to believe in the currency piece, because I saw this wave in 2013, but it's coming back to some degree, where it's like, oh, we really want blockchain technology, distributed ledgers, blah blah blah, but we don't think the coin piece is important. And while I think we will actually see blockchains used in a variety of different ways, I think it's very important to consider the Bitcoin system, for example, holistically, in the sense that the coins are a real incentive that's needed in order for the network to function. And so if you start taking out the miners have no reason to mine, and so the whole system basically falls apart. So in many cases, it's almost like the currency application seems too obvious to really be interesting, but I actually think it's pretty phenomenal that you can send value to somebody on the other side of the world in a matter of minutes without requiring any intermediary. And that was kind of the first original use case, which I actually think is going to be really powerful.
I would just add that the killer app, the thing to look for is adoption. And I think that's what you'll hear all throughout 2018. Until there's adoption, we'll be talking more about currency. Once there is adoption, you'll start to see fantastic product and innovation. So everything going forward should be, how are we going to get people to actually transact? Right now, across Lightning Network or across some of these other networks, we're nowhere close to the capacity, especially on the Bitcoin Cash Network. Like, until you get adoption, the rest is kind of moot.
And speaking of adoption, I guess, what I've heard from you guys, we talked a little bit about Bitcoin, but also, some of the utility tokens that are out there. I was at the Sohn Investment Conference, big hedge fund conference on Monday, and there was an investor there who presented saying, he used to invest in Bitcoin and a whole bunch of other crypto assets, but now he's just back to Bitcoin. He thinks all of these utility tokens, they're going to be useful, but inherently they're not going to be worth that
John
much.
Pfeffer?
Exactly. But so what do you guys feel about that? I mean, is Bitcoin the only game in town, or is there room for a whole bunch of other crypto assets to have value?
I can start. I would say, I'm definitely very bullish on the monetary use case. I think money is, by definition, the biggest market. And so if you are investing in the types of coins that are kind of a general purpose money, and so that would be things like Bitcoin, potentially privacy coins like Zcash, Monero, things like that, I think, A, those are the biggest markets, and B, I think be less subject to some of the concerns of inflows and outflows that I think will become a real issue for some of the utility token networks. In the sense that if I'm using, a network that is basically a distributed AWS or a distributed file storage or whatever, I may not really want to store my wealth in that particular token, and so I may be buying it, but then only using it for a brief period and selling it once I'm done. And so I think a lot of these networks, even when they become widely used, may not really see super meaningful appreciation at the token level. And so I think we're still kind of figuring out what a lot of those economic models are, but I think it's likely that we'll see greater appreciation overall in, money, which is where people are actually storing their wealth.
Brian, do you want to?
So I don't agree that Bitcoin is going to be the only coin out there. That's just, to me, I'm making a bet on the entire ecosystem. And the reason why is if I look at it and say, what we're really building here is a new digital economy. So we need multiple different protocols to function in that economy. Bitcoin has served very well as a currency. That's what it was designed to do. Perhaps Bitcoin becomes the currency of the digital economy. But then look at what else we need. Okay, if I'm sending money from Romania to Venezuela, okay, if I'm sending Bitcoin, that's great, solves a problem. I can do it very fast, effectively, no third party. But what if we have a dispute? What legal system is that under? Is it Romanian law? Is it Venezuelan law? It's on the internet. So I need a dispute resolution system. I also need a legal system, somebody to write the contract. I also need something, if once that contract is breached, who do I go to? What's the remedy? Think about anything that happens in a typical economy, and you're going to need that in this new digital blockchain economy, if you will. And therefore, I see multiple chains, and I don't know if it's 10 or 20, but I see multiple chains functioning interoperably to fill out all the pieces that we have in a typical economy. So I want to make a bet on the entire space. I want to make a bet on cryptocurrencies. I want to make a bet on blockchain, enterprise blockchain. I want to make a bet on the whole thing, and I think that, to me, is the more risk-reward, the better risk-reward.
Rob, do you have anything to add?
Not much to add to that. I do agree that there's a middle ground between 1,600, and I would say if I were an investor, I would focus on the top 10. Right now, I would think you'd be safe with that. I think that Bitcoin is a great tool for storing value or acting like a modern day gold, and I think Ethereum is kind of like the Windows of building out technology platforms on. So I think there's, as long as we come back to adoption, if there's going to be adoption, you're going to see it across a number of the bigger coins, because again, there might be some concerns about putting all your wealth into the 950th coin, whereas if you're in the top group, you have the miner support, you have the smart contracts, and you have other things to go with it. So I think there's a middle ground.
Rachel, I know Circle does a lot of trading in various assets. Do you want to chime in here?
Yeah, I mean, again, going back to consumers in my career, I think what we're saying here is that we're seeing a new asset class come on board, right? And in my career, I never thought that I'd actually see a new asset class being born. And we're talking about the tokenization of all types of digital services for this new global economy. What excites me personally is how to take that new economy that is going to be tokenized 10 or 20 years in the road, 1,600, it'll go to 30,000 types of digital assets, right? Companies digitizing their revenues, any sort of value, your house that can be tokenized. How do you actually present that in a way to consumers such that it's approachable, digestible, they understand what they're investing in, how to value these assets? That is the real sort of market opportunity that we have in place for retail investors specifically over the next 10 years.
Yeah. I also wanted to talk a little bit about consolidation of the industry and maybe eventually in some of these tokens. But Rachel, you're a good example of that. I think at Stocktoberfest West 6 months ago, you were representing on stage Trigger. A few days later, Circle bought your company. And then it was last month, they just bought Poloniex, which is another big exchange. You're seeing Coinbase do a bunch of deals recently. What do you think of all this consolidation in the industry? Do you think it's going to continue, and what does it mean, for the ecosystem and the companies within it?
Yeah, I mean, we're walking proof on this stage that is the start of this trend. I think we're just at the beginning stages of more M&A activity, especially in the crypto space, and especially amongst sort of the more established startups that have been in this space for 5 years or more. Coinbase or .com, they hired a head of product, a head of M&A, and then over time, you're going to see what are the reasons why these companies are actually starting to consolidate. Definitely a war for talent on the engineering side. There's very few resources that are specifically catered towards blockchain engineers, infrastructure, operations, et cetera. Start to see verticalization of the different business lines of these more established startups. Is it consumer investing? Is it, lending? Just as, banks are starting to not acquire and partner with other financial fintech services, you'll start to see the same thing in crypto. And then the last piece I think you'll see is to start to see more consolidation on the AML and compliance side as the regulatory nature starts to get even more complicated too.
Arianna, what do you think about all this consolidation?
Well, I'm just waiting for all my companies to be acquired at great multiples, basically. No, I mean, in general, I think one concern that I have is that, I think to some degree it's not surprising in the sense that obviously a lot of these, it's become a very competitive space, and so consolidation is somewhat natural, and I think, there's no surprise there. On the other hand, I do worry a little bit about the danger of centralization. I think, the original ideological impetus for a lot of this industry existing at all was really the idea of decentralization and giving power back to the user. And so what I think we're starting to see, and something that I'm a little bit concerned about, is just if we recreate the existing financial system with different major players, then in some ways we may have had a small incremental improvement, but not necessarily kind of realize the full potential of what the technology can do. So it's definitely a trend that I'm watching closely. We'll see how it shakes out.
Rob, what do you think about that? I know centralization is something people talk about with mining too.
We were just consolidated, so I guess it's not a bad thing. But it is, if you're a crypto enthusiast, consolidation is the antithesis of the entire industry. So I think you have to be very careful. If you look at it from a pragmatic approach, you look at something as volatile as this industry itself, October, November, December, you could raise money standing outside with a sign saying block or crypto or iced tea. And then January, February, March, you'd be lucky if you could do anything in the space. So it's very nerve-wracking. But there's also, there's parts of this industry that require huge amounts of capital and where economies of scale play a real role. So on the utility side, on the power side, on the equipment and M&A side, there's great opportunities. But I think you have to be very careful to not create, again, Citibank, Goldman Sachs, now in crypto. That is not what the goal is, but there are certain pockets of the industry that consolidation makes sense for. And the markets want to see consolidation, and certainly up in Canada where we've seen it happen in gaming, and then recently in cannabis, and now we're seeing it in crypto. The bankers certainly like consolidation too.
Brian, I see you nodding your head.
Yeah, listen, there's been a lot of money raised, right? I mean, I talked about these kind of startups that have raised $50 million, and they might need $1 million a year to run their operation. So what are you going to do? You're going to sit around for 50 years, or you're going to buy something? So I would expect that there would be a lot more of this consolidation. And the trend, which we're starting to see, which is kind of interesting, these protocols, these coins, these core level protocols that have raised billions of dollars are now going out and seeding venture capital funds that are going out and buying other companies and consolidating. So it's turning a little bit of the traditional economic system on its head, in that this kind of decentralized protocol has become a source of funding for a lot of these deals, which is you wouldn't expect. I think we see a lot more.
Yeah. Another big issue on the minds of a lot of companies, especially in New York right now, is regulation. I think a bunch of exchanges just got letters from the New York Attorney General. Circle may have been one of them. I've heard differing opinions about this from people in the crypto space. Arianna, what do you think about regulation? Is this too much, too little? Are they going about it right way, wrong way?
I think in general, regulators have been pretty slow to act. And I think on the one hand, I appreciate the fact that they're trying to be thoughtful in terms of what guidance they issue. On the other hand, it's also making it very difficult for companies and projects who in good faith want to be compliant to actually know what to do. Because if you ask 3 different law firms right now, you'll probably get 3 different opinions. So, that's one concern. I think another thing that I worry about is that if the US takes too much of a kind of stringent approach to a lot of this stuff, projects are just going to move offshore, and they've already started doing this. They're moving to Malta, they're moving to other areas that are being much more favorable, Switzerland. And so I think the US runs the risk of kind of being left behind if they don't, provide regulation that is actually, favorable to the companies. And ultimately, it becomes this game of run to the country that actually is most beneficial to the project. And I think we're seeing an increasing number of teams that are distributed and with, founders and developers in different areas. And so teams are more willing to make those moves than they might have been, before kind of the whole crypto wave.
Yeah, I think, as you said, regulators are slow to react. So what we're seeing now is just regulators coming in after the 2017 ICO and crypto phase, just trying to understand what that was and engaging different players more actively. So we're just in knowledge discovery mode at the moment. I think it will be sort of the more well-capitalized startups that actually take a seat at the table and have meaningful conversations with the regulators. But I'm actually quite bullish. I think it's everyone's incentive to work together and to really establish more guidance and more rules as to exactly what we are dealing with, such that we can then unlock more productivity for the U.S. specifically. It's in everyone's best interest.
Yeah, I've been pretty encouraged actually by the U.S. regulators. I think they've taken a very thoughtful approach to this space where they don't necessarily want to stifle innovation, but obviously they want to protect and make sure that investors aren't swindled, right? Relative to something like you look at South Korea that was going to cut it off, or China who just completely banned it. Relative to that, I think the U.S. Securities regulators have done a great job. The risk is we have a global asset that is subject to local regulation. And it really doesn't matter if I issue my coin here in the US anymore. Multiple coins have issued and they completely blacklist the US and raise billions of dollars, hundreds of millions of dollars without the US investor. So there is a risk that by taking a thoughtful approach and a methodical approach that you start to lag behind. And I think that's starting to happen. I, for one, would like to see the US come right back and say, hey, let's get some definition on when does a currency or a token become a security? When does it become a utility? Draw that line, and I think the industry will be boom here in the US.
Can we hear from the Canadian too about how he feels about
You know what? Brian couldn't have said it any better. I would just come back again to adoption. Regulation's a good thing if done properly. I don't think in the United States innovation's being stifled. I think they're taking a methodical approach to it. I don't think it's going to hurt anybody. It'll add more mainstream investment to the space. It'll make it possible for banks to get involved, for a Walmart or an Amazon, et cetera, so on the adoption side. So I think that's a good thing. I think where regulation gets interesting is when you drill down to the actual businesses themselves and you have communities and or states and or provinces making unilateral decisions and creating regulatory policies around that. That's where it becomes kind of fragmented and unusual and difficult to navigate, and that's where it'll go offshore.
Yeah, you need guidance at the federal level, because even in the U.S., you're starting to see differences of opinion at the state level. I mean, Wyoming just a couple of weeks ago came out with very favorable digital currency regulation and laws, but when you're building products and services for all consumers, you need to be in all 50 states to serve them effectively and really get scale. So that's not really helping. We need more of a higher up guidance going forward.
Great. Well, I think that's about all we have time for, but thank you all, each one of you. I hope that was a great discussion. I thought it was
Thanks.
Thank you.
That was fun.